a drill ship, which is one of these things which would today cost around $1 billion to build. Basically, it allows you to drill deep into the ocean without really having floor or kind of feet on the ground, if you will. They're ships that they've got a kind of hole in the middle to allow drilling and so on. It's really a kind of engineering marvel. So the last time one of those ships was built was about 10 years ago. The industry went through a crazy orgy of overbuilding about 12 or 13 years ago, and then it went into a total nuclear winter where there were so many ships delivered, and almost all of the players went bankrupt because they were so highly levered and rates collapsed and all of that. And when we look at the situation today, things have come back into balance. A lot of the older ships have been scrapped. Nothing new has been built. And so when you look at a company like Valaris or Noble, and if you were to just look at their fleet and say, okay, what would it cost to replace this fleet, right? Well, the cost to replace this fleet would be like maybe 10 times the market cap because they're trading at such an extreme end of the thing. And the second is that the current day rates that you get paid for drill ships and jackups and all of these does not justify a new build. So, for example, a new drill ship, which would cost, let's say, $1 billion and would probably take you 4 or 5 years to get delivery, would require day rates in the range of 700,000 or 800,000 a day to get some reasonable cost of capital back, like make low teens return on your capital. So you would need to get about 800,000 a day to get a 12% or 14% return on your capital, which is reasonable. And day rates today are in the 400s. So basically, you cannot go out and build a ship today. And every day and every year, ships get scrapped. And so this market is coming into a tightness. The other thing that people don't realize is that offshore drilling for oil has a very low cost. So like, for example, in Brazil, which has huge amounts of offshore drilling, the cost of producing oil is $20 to $30 a barrel. It's almost half of what it costs with fracking to produce oil offshore. It's long cycle time, high capex, but effectively when you amortize it, you get to the $20, $30 a barrel type price. So it's very profitable. And so basically, this is a situation where these companies have no debt or very low debt. They basically have great assets, and the market is gradually tightening. And if rates were to go, for example, from the 400s to 600 or 700 a day, Valaris and Noble, they would be just printing almost the entire market cap in cash every year. So that's why Mohnish is there.